And it's time for business now with Madison Reedy. Madison, Briscoe Group, they've released their latest sales numbers. Are people spending? And if they are, what are they spending on?
Yeah, they are spending, but their habits seem to have changed. And we should note here that Briscoe's isn't just the homeware and appliance store, which we have certainly all seen the ads about. It also owns Rebel Sport and Living and Giving too. So its total group sales for the last 3 months of last year, so the December quarter is what we call it, they were up just 1.8% to $210 million. That took its full year sales up for the whole year last year, up about 3.3%. But the managing director of Briscoe's group, Rod Duke, has called this result just satisfactory. And that's because while volumes were up, the value and the margins that they earn off those products, or the profit they make off them, that was down, and that was certainly slimmer. And that was because shoppers were buying mostly sale items. And that was because Briscoe's had to heavily discount many of its products earlier in the year. So not just for Boxing Day as many retailers usually would, it's because there is increasing popularity for these November sales events like your Cyber Monday, your Black Friday and your Singles Day. Rod Duke says that those are becoming increasingly popular in this country, but they do come at a cost to companies like his.
Interesting. Okay, so the markets have taken a bit of a nosedive today, have they, as we hear more about coronavirus and it takes its toll?
Yeah, the markets have been absolutely savage today around the world and certainly in New Zealand too. Our NZX Top 50 index opened down about 2% this morning. It has since recovered a bit throughout the day. It ended up closing the day down 1.4%. That's a fall of about 167 points to close at 11,550 points. Companies that took the worst beating on the NZX today were pretty much anything and everything tourism related. So as you'd expect, Auckland Airport, Air New Zealand, they were obvious hits on the stock market today. Also a company called Tourism Holdings, that's been faring pretty poorly lately.
The campervan people.
They sell campervans, exactly. And also Sky City, which is the casino and hospitality operator who rely on tourists as their big spending customers. They've taken a dive. Also other companies like A2 Milk, Main Freight, the freight and logistics company, and also Vista, which is a cinemas software company. They all have extensive operations throughout China, so they've all been hit. Now, what we are seeing on the stock market, though, we should say is just a bit of the initial knee-jerk reaction. The real economic impact is yet to be seen, but having spoken to a few economists about this, in fact, today, the chief economist at Kiwibank, Jared Kerr, actually said that he expects the economic impact in New Zealand of the Wuhan coronavirus outbreak to actually be worse than that of the SARS outbreak in 2003. And that's because our economic ties to China now are much stronger than they were 17 years ago. In fact, in 2018 alone, we actually shared $30 billion worth of trade between us and China.
So where's this left our dollar in the scheme of things?
Yeah, the New Zealand dollar, that's buying slightly lower at 64.6 US cents, 96.6 to the Australian and 49.1 British pence.
Thanks, Maddie. Madison Reedy with our business numbers there.